Good afternoon, everyone. We are in session. Our friends with the media are welcome to stay, but if you just turn off your cameras. We welcome back today our Parliamentary Budget Officer. Before we start, colleagues, very quickly, we discussed among the parties that we will adopt UC the motion put by Ms. Suds on June 10th regarding M16. So we're fine with that. Wonderful. And we'll just do the two budgets now because we have a heavier crowd in the second hour. So we have two budgets to approve, one for today for today's study and second one for the extension of the CER. If we can have unanimous consent, thank you very much. Wonderful. PB O'Ryan, welcome back to OGGO. We'll turn the floor over to you for 5 minutes. Please go ahead.
Thank you very much, Mr. Chair. I am very pleased to be here today, and I do thank the committee for the invitation to discuss my office's recent reports, one on supplementary estimates A for 2026-27, and of course the other is our economic and fiscal outlook for as published on June of 2026.
I am joined today by Mark Mahabir, Director General and General Counsel, Costing and Budgetary Analysis, and Govinda Bernier, Director Budgetary Analysis, who both led the work on our report on the Supplementary Estimates A 2026-2027, which was released on June 9th, 2026. I'm also joined by Christina Grinspoon, Director Fiscal Analysis, and Carolyn Nickel, Advisor Analyst, who were involved in overseeing and drafting, respectively, our report on the Economic and Fiscal Outlook published on June 4th, 2026.
Begin with the estimates. Supplementary Estimates A seek $3.6 billion for 16 measures from Budget 2025. Together with the $14.7 billion sought through the main estimates, we assess that approximately 90% of Budget 2025 expenditures planned for this fiscal year have now been reflected in the estimates. Supplementary Estimates A also include $358 million for 6 measures announced in the Spring Economic Update of April 28th. This amount represents 4% of new expenditures announced in the Spring Economic Update planned for this fiscal year. I
would now like to highlight a few points from our report on the Economic and Fiscal Outlook.
Economic and Fiscal Outlook, or the EFO, was published on June 4th and prepared using information available as of May 8th, following the Spring Economic Update on April 28th, all 2026. As
committee members know, economic forecasts are based on information available at a given point in time. Our report was prepared using information available as of May 8th, 2026, and therefore did not take into account the national accounts published by Statistics Canada on May 29th.
On May 29th, Statistics Canada revised its annual real GDP growth for 2025 upward from 1.7% to 1.9% for the entire year. In that release, StatsCan also reported that real GDP contracted at an annualized rate of 1% in the fourth quarter of 2025 and a further 0.1% in the first quarter of 2026. These revisions to GDP did not materially change the forecasts we presented in our Economic and Fiscal Outlook on June 4th, which already anticipated below potential economic growth through 2026. In this way, parliamentarians should view our projections as reflecting continued below potential growth through 2026, broadly consistent with recent assessments by the Bank of Canada. That said, based on the information currently available, the Parliamentary Budget Office is not of the view that the Canadian economy is on a clear negative trajectory. The 2 quarters of negative growth into early 2026 have more recently been followed by strengthened monthly data in respect of GDP, employment, trade, and manufacturing. It is important to keep in mind that economists monitor indicators associated with recession because they may signal the need for significant changes in economic policy. Par exemple, une détérioration des conditions
For
économiques.
example, a deterioration in economic conditions could lead governments to consider additional spending measures to support economic activity, measures on which parliamentarians may have differing views.
The Parliamentary Budget Office will continue to monitor incoming economic data and evolving economic conditions, and we will continue to update parliamentarians on our assessments. Merci. Nous serons heureux de répondre à vos
Thank
questions.
you. We will be happy to answer your questions.
Thank you. We'll start with Mr. Chambers. Welcome back to OGGO, Mr. Chambers. The floor is yours for 6 minutes.
Thank you very much, Mr. Chair. It's a pleasure to be at the mighty OGGO. Ms. Ryan, thank you for being here. I would like to congratulate you on your appointment. It's the first time we've had see each other at committee, and thank you for your service to Canadians. But also, I think like to appreciate the work that your office has put forward, and you come with your officials here that I know do a tremendous amount of work, and I appreciate some of the recent work that you've released. If I might, I'd just like to spend.
Rappel au règlement, Monsieur le Président.
Point of order, Mr. Chair. I was waiting a little bit, but there was no interpretation.
Thank you very much. I appreciate the opportunity to ask some questions today. If I might focus on your recent economic outlook, if that's okay. One of the things I've been starting to pay a little bit more attention to is debt service costs. And we've seen, even in the baseline projection provided in the fall economic update, that just within a few years, the debt service costs will approach about $80 billion. Another fact that I understand to impact the potential for the fiscal outlook is about 40 to 50% of the federal government debt is purchased by hedge funds. This is outlined by the Bank of Canada. It's been outlined as a rising vulnerability. If there is an economic event outside of Canada, and now a large proportion of our expenditures are now going to service on the debt. We also fund our debt with short-term instruments, mostly 2 and 3 years. The average maturity is about 6.6 years, the Canadian federal government, as I understand. This year, we have to borrow $510 billion in the market. Next year, we have to borrow almost $600 billion. And the year following that, 2 years from now, another $550 billion, which means we're basically rolling over the debt frequently. So my questions are more around the sensitivity now to the fiscal framework based on borrowing costs. We've seen the 5 and 10-year rates go up. So borrowing costs are actually going up, not coming down, but the entire fiscal projection the government makes is actually on borrowing costs going down. So I'm just wondering if this is an issue you're exploring. I know you do some sensitivity analysis, but just wanted to get your feedback on keeping an eye on that debt service cost number.
So thank you very much for the question. It is very much an issue that we are concerned about within the Parliamentary Budget Office. And within our report, we've tried to start to bring more focus to the question of debt service charges. First of all, by portraying the track that you described from different perspectives. So we highlight, for example, that we see debt service charges as a share of every available dollar rising over a 5-year period from essentially 10.6 cents on the dollar up to 13.1 by 2030-31. So, I think that's one way to draw attention to it. It is starting to rise under current tracks with current expected interest rates and so on. From a per capita basis, that rises from roughly $1,300 to almost $1,900. So under status quo track, it very much is showing the type of profile that you're talking about. I think that the Bank of Canada has been increasingly pointed in drawing attention to the dynamics that you speak about, including the ownership of amounts of debt by hedge fund owners. as well as the potential for essentially coincident risks happening, in the global environment and stock markets and so on. And so from a number of perspectives, I think that draws our attention to the risks within that debt service profile. And while not kind of defining the question here, I'd certainly be open to speaking with yourself, other OGGO members, about what type of sensitivity analysis we might put in play that would help understanding of these measures and understand where the risks are, for sure.
Thank you very much. And just so if I just draw an underline, the fact that the debt service costs are now, basically it's the second largest line item in the budget. OAS costs are higher. It's more than we spend now on healthcare, and actually that gap is going to grow in the next couple of years. I think understanding sensitivity around what would happen if interest rates don't drop as we predict, or not as we predict, as the government predicts, what's that going to do to the fiscal framework? Because I think it will prevent some money being available for more productive uses, whether it's tax cuts or, of course, social programs. And I might just ask about the impact on the fiscal anchor, because I know that was also part of the work that you did. And did I read your work correct, that based on some of your assumptions, the government has about a 1% chance of keeping their new fiscal anchor?
That was very much part of our analysis in the fiscal outlook. So on your earlier points about the sensitivity, I agree, and we'll follow up on that. In terms of the analysis about the chance of the government meeting its fiscal anchor for a declining share of deficit to GDP, briefly what we did there was look back at the different types of shocks that have happened in the past and year-over-year shocks. And the result that the government, absent policy changes, would have roughly a 1% chance of meeting its deficit as GDP target rests on essentially the reality that both deficits and so the numerator as well as GDP itself are quite sensitive on a year-to-year basis. So given that that measure is defined as a decreasing track every year, that's what drives essentially that mathematical baseline, that it's going to be a very hard target to hit, not impossible, and especially if the government wants to manage it very carefully. But I think that is essentially the message that we want to put forward with that analysis.
Thank you. I understand that if they do break it, that would be the third fiscal anchor not kept in the last 3 or 4 years.
I haven't counted, but
does that sound about right?
It sounds about right. Yeah.
Thank you very much, Mr. Chair.
Thanks. Mr. Gasparo, please.
Thank you for being here again. It's great to see you. In your PBO report, you touch on real GDP. And as you know well, when you're looking at a country's fiscal position, reviewing it relative to its peers, I think is incredibly important because it gives the appropriate context for the macro global economic environment. So in 2026, you rightly point out that real GDP is projected to rise by 1.1%, followed by 1.6% in 2027. The IMF expects Canada to have the second strongest economy this year among G7 countries after the United States. In addition, external forecasts from the OECD also suggest that Canada is expected to grow at the second fastest pace in the G7 this year and next. Does the PBO analysis show a similar pattern of relative strength?
So thank you very much for the question. We did not do an analysis of international comparables of growth rates. I would say that that type of analysis, it checks with my casual understanding of international growth rates. So I would say as well that sounds about right.
Thank you for that. You also touched on, obviously, the main estimates and the supplementary estimates. In budget 2025, we're making strategic capital investments to raise long-term growth rates and to try to build, obviously, a strong economy off of infrastructure and housing. Some of our largest expenditures, obviously, then flow into investments in housing and infrastructure, and the totals are significant, whether it's $2.3 billion going into the Build Community Strong Fund or additional funding for Build Canada Homes and the Canada Infrastructure Bank. Can you touch on how important that is relative to our credit rating? So Canada continues to hold a AAA credit rating, obviously giving us a strategic advantage relative to other major economies. Can you tell us why it's important for Canada to continue to maintain a AAA credit rating and how that helps with market confidence, borrowing costs, as well as supports our plan to build and finance infrastructure and housing?
Thank you very much. It's a very rich question. I'll start with the aspect of credit ratings, which are integral to the aspect of our borrowing costs, as raised by your colleague. And it has certainly been a strength of both the Canadian economy as well as Canadian public finances that we've been able to maintain that AAA rating. And it has tangible benefits for us year over year in terms of those borrowing costs. And I think that it reflects a number of factors that relate to the overall management of the Canadian economy and many strengths as well as you've spoken to.
How much time, Chair?
We're at 4 minutes, so 2 minutes to go.
Great, thank you. I'd like to drill down a little bit on the IMF for a moment. And the IMF, just going back to real GDP growth, supports the 1.5%, or they project a 1.5% increase in 2026. And they recently noted, and I quote, "Canada's strong fundamentals and reliable access to external financing provide important buffers for the Canadian economy," end quote. From your perspective, what factors are supporting Canada's ability to continue growing despite external economic headwinds?
So there are a number of factors that play to Canada's advantage, and that speaks to our natural resource base, our strong, vibrant, educated population, our business environment, our business culture, and so I think there are many underpinnings for continued strength in the Canadian economy, despite the headwinds that we face that are real and undeniable. I would say that on balance, we generally agree with the forward track that was put forward by the Department of Finance in the spring economic update, in terms of the general forward track of the Canadian economy, which in turn was based on private sector forecasters of how the Canadian economy will develop over short to medium term. And so I think that track for both ourselves and the spring economic update was a bit more constrained than the figures that you're citing from the IMF, but essentially reflect the fact that these headwinds from trade, from the circumstances in the Middle East, from continuing uncertainty about the global environment generally, have been dampers on that overall business environment for sure.
Great, thank you.
Merci encore une fois.
Thank you once again. It's always very important to have the facts, and I'm aware that there have been changes with the new government in terms of the anchor. Even the IMF is asking that we reestablish our anchor, the debt to GDP ratio. For a long time, it was that ratio that was the main reference to assess the health of our finances. But today, it has disappeared. So now, what is Canada's fiscal anchor? You raise a number of important points. I would say that we have two anchors with the government now. One is the percentage of the deficit to the GDP, and the other one is a commitment from the government to balance spending to operational revenue with revenue. And the government makes clearer their commitment to spend less and invest more in a framework where they seek to increase GDP as a total, to increase the denominator so that there's prosperity that would allow us to spend more in the future. The IMF asks us to reestablish it. I think it's important to not keep the idea that there's just one number that's important to manage something as complex as the government or the Canadian economy. And I think it's a suite of measures that are important. But it's also important that the government keep its commitments. And if it doesn't happen, it's important to be transparent with Canadians and especially parliamentarians as to why and what they plan to do. Let's talk about public spending. We talk a lot about the cost, but less about the quality, because quality is about prosperity. In Canada, do we have enough tools to measure public spending in an accurate way? I would simply say no. I think we have a range of measures every year to look at government spending, but those annual reports from departments are structured by the government to set forth their perspective on spending. And I think we agree, without putting words in your mouth, to say that we would all benefit from more information on the quality of spending. So it would be good for the Parliamentary Budget Office to assess the quality of the spending. I think that's an important objective, and we've undertaken discussions on how to do so. Okay. Now, I have 2 minutes left. I have so many questions to ask you. Earlier, we talked about the cost of public investments. Aside from the quality of the investments, do you calculate the cost of inaction? For example, a housing deficit, aging infrastructure, for example, underinvestment. I would say that in the past, we've done studies about exactly that. For example, we conducted a study on housing in August 2025, and Caroline was one of the main authors of the study, and we aim to do more. Is there a risk that some savings today could lead to higher expenses tomorrow? I would say certainly. I wanted to hear you say it. I just have a few seconds left. At my next turn, I'll ask about major projects, because we're talking about relative growth of 1% to 2% for GDP. And so I'd like to know quickly, with a low growth context and stagnant productivity, what place should major projects have in a growth strategy? I think it's important to consider the way the government's plan could work. Often, government spending is advised when the economy is not very active. In addition, we could foresee that infrastructure would be the basis of economic activity in the private sector in the future. And that's the philosophy of the government. But as you've said, the question of implementation with a planning framework that's well thought out and well reviewed, so it's completed on time and on budget, well, those elements are also important. Thank you very much, Mr. Chair.
Please.
Thank you, Chair, and thank you, Ms. Ryan, and to your colleagues for joining us today. I am going to focus on your economic and fiscal outlook, and I really want to zero in on one of the statements in the highlights, and it says the following: assuming no new measures are introduced and existing temporary measures sunset as scheduled, the budgetary deficit is projected to decline to $58.2 billion by 2030-31. And I want to ask for a little bit more of an explanation of that, but perhaps I'll ask my first question. Your report also showed that the debt to GDP ratio will be flat over the medium term. Is that based on the same assumption? That as long as there is no new funding introduced and old temporary spending sunsets?
That's correct, Ms. Block.
Okay, so is this a reasonable assumption? This is getting back to my first question around an explanation.
So I think it's difficult to portray all possible actions that a government might take. And so for that reason, we wanted to have a baseline that people could understand, okay, what's in, what's out, and, and from there, I think reasonable people can take their own perspectives about what the government may do moving forward in terms of things like renewal of the Canada Health Transfer, which, is currently on a track to move to a much lower growth for provinces and territories per current legislation. People may differ in terms of whether the government will move to take that back up to the traditional 5-6% range. That's not in our forecast. It's not in our medium-term track. And so we wanted to be clear and transparent so that as people kind of look at these type of measures moving forward, they can say, okay, that's not in, but we anticipate that that would be a reasonable thing to do. And if the government does that, you can do then calculations of, well, where does that take us in terms of debt to GDP and so on. So, so that was the underlying logic.
Okay, so just for my own understanding, how many times in the last 10 years has the government not introduced new spending? Did you take that into consideration?
So very few, if not definitely zero. So I think, that question of how can we best support, a discussion of the fact that that fiscal track has gone up year after year, budget after budget, it is very much the reality. And, I think we think that we could do better in terms of putting that forward in a separate document, very soon, that would make that more comprehensible for, parliamentarians and average Canadians to just benchmark that, right? So you can think of, take a year like 2025, when it was first forecast, what expenditures, and I'm not going to be accurate here, would have been, roughly 420 billion, then, rising through time, towards now the level of 510 billion that we're at.
Okay, so getting back to debt to GDP, if the government introduces new spending, for example, in the next budget, how much new spending would it take for the medium-term forecast to show an additional increase to Canada's debt to GDP ratio?
It's a calculation that you for sure could do depending on what you think GDP is going to do. And so, I think there's some sensitivity work that we could certainly do in that space. If I may, I think it goes to the government's assertion that by investing more, they're going to expand that base and get that, kind of virtuous circle of more GDP. But, I think the government has also been clear that there's a number of risks to that to transpire. And so if it doesn't come through, then definitely the debt is certain to remain.
So on page 5, you note that the increases to the government's revenues are being generated by higher energy prices, not stronger economic activity. Is that correct?
I would say currently a lot of the government's revenues have been generated by energy prices.
Ms. Suds.
Thank you very much, Chair, and thank you, Ms. Ryan, and all of your team for being with us here today. I'm going to continue on a similar track, as one of the things that caught my eye in your analysis of the supplementary estimates was the reduction in projected public debt charges. Given that debt servicing costs are often a major focus of fiscal debates in this committee and, of course, in the House, I think it's important that Canadians understand what's driving those changes. Your report notes a reduction of approximately $1.5 billion in projected public debt charges. Can you explain what factors have contributed to that improvement, and tell us a little bit about, in relation to Canada's current fiscal outlook?
Thank you. And thank you for drawing attention to that. I think it's important to shed light on, the positive news as well. So that type of analysis shows up both in the study that we did on Supplementary Estimates A, which is the track of, what's being put before Parliament right now. As well as in the economic and fiscal outlook, where we do project lower debt service costs versus previous forecasts as being a positive factor for, the forward deficit and debt projections. I would say that, principally conservative budgeting approaches certainly showed up as being warranted and prudent, so that as conditions came forward to have a better interest rate profile than had been previously forecast, that let those charges come in lower than previously forecast.
Excellent. Thank you for that explanation. I think very helpful for those who are paying attention. Moving on, or pivoting slightly, we're certainly living in a period of considerable global uncertainty. Trade relationships, of course, are shifting. Geopolitical tensions remain elevated. And many advanced economies are facing fiscal pressures after years of responding to successive crises. Looking strictly at the fiscal indicators and the economic outlook, does Canada enter this period of global uncertainty from a position of relative strength compared to most advanced economies?
I think your question, is well framed in flagging this context that is still, I think, precarious, and will give us some bumpiness, some scruffiness going forward. I think there are many reasons to think that Canada does come into this period from an advantageous position. We spoke earlier about, the economic conditions that are positive, including our natural resources, definitely a strength for Canada always, as well as, vibrant, educated workforce. Our tax levels compare in many ways favorably to other countries. And our federal debt is lower on a comparative basis than other G7 countries. And so those are all positives that work in Canada's favor. That said, our business conditions have been concerning for quite a while. Our productivity numbers, our business investment, our research and development, our entrepreneurship numbers have been flat for quite a while, and that's translated into similarly lack of growth in GDP per capita over an extended time period that I think raise concerns as well.
So would it be fair to say that maintaining fiscal capacity today gives Canada more flexibility than many of our peers to respond to future economic and national security challenges?
That is absolutely a straightforward statement.
That's my time.
Giving up 13 seconds, but OGGO thanks you. Madame Gaudreau for 2.5 and 13 seconds.
C'est gentil. Mais j'ai
That's
trois.
kind of you. I have 3 questions. First, concerning major projects and growth. The main risk for public finances today, is it too much investment or a deficit of productive investment when we're talking about quality? I would ask in what sense, surplus or deficit? But I'll respond initially to say in the last decade, there's an argument that a lack of major projects has contributed to a lack of growth in productivity. And so then it would be direct to say that there's a deficit in major projects. But I think your question has to do with the bottlenecks in having such a large number of major projects trying to move forward at the same time. And we need to consider the availability of labor, even of financing, and in management capacity to have so many projects move forward at the same time. Okay, that leads me to say, when we talk about the quality of finances, are there sectors with public spending that are increasing more quickly than the results obtained? I would say that I see the logic of your question, but I don't have an answer for you today. Would it be possible to answer? I would ask you, I'll send you the wording of the question to be certain. Yes, well, I've concluded, but I wanted to say it's not just about the amount we're spending, but it's with what goal for the future. That's my time. Thank you.
Thank you. Colleagues, I just got a note from one of our associates in the House saying there's a vote coming. We'll have 30-minute bells, of course, so if the lights flash, can we just agree that we'll continue at least till we get through the last 2 rounds, our last 2 interventions? Wonderful. We have Mrs. Jansen for 5, and then we'll finish with Ms. Martin with 5. Go ahead, Mrs. Jansen.
To follow up on my colleague's question, can we get you to produce a report on the projected future costs to our GDP from red tape and regulatory uncertainty?
I would be happy to work with you on how you would define those
Thank you.
things and see what's possible.
Okay, so the government says this year's deficit will be 65 billion. Your office says it will be closer to 72 billion. So who should we believe, you or the government?
I would say that our forecast reflects probably an extra at least 2 months worth of information.
Okay,
Ours-
could we say that the government's books are in worse shape than the government is telling Canadians?
I think in the 2 months of difference of when we published our update versus when the government kind of locked down its forecasts, there was more bad news than good.
Right. The report says there's less than 1% chance that the government's deficit to GDP plan unfolds as projected. For the average Canadian watching at home, does that mean that there's a 99% chance the government's plan does not unfold the way they say it will?
I think that that is a fair statement.
Okay.
Unless the government takes action to correct how bumpy the economy can be.
Would you describe that as a significant fiscal risk?
I would describe that as a risk to the anchor itself. I think that there's probably more margin to manage safely and prudently within that space, but the anchor itself has got some design issues.
And if a business came to a bank with a financial plan that had a 99% chance of failing, they would never get a loan. So with that in mind, should Canadians be concerned about a government's current economic situation?
I think the implication of that work is to say that because the economy remains subject to so many risks, and because the anchor is so sensitive to both the movement in the deficit as well as the GDP, it's going to be a tough target to hit.
Does your report suggest that the government has left itself very little room for error if the economy weakens further?
I would say it's left itself little room to hit the deficit to GDP declining target year over year in a consistent way. I think there remains room to respond to economic conditions separate from that.
Your office forecasts economic growth of about 1.6. The Bank of Canada forecasts 1.5. The government forecasts 1.9. Would it be fair to say that both the PBO and Bank of Canada are more cautious than about Canada's economic outlook than the government is?
I think our forecasts do reflect more news throughout the year because they were published after the government locked down its forecast, and that it is definitely more pessimistic than the government's.
Would a difference of 0.3 or 0.4 percentage points in economic growth have a meaningful impact on government finances over several years?
Yes, they would.
Does using overly optimistic growth assumptions make the government's finances appear healthier than they may actually be?
I think time will tell on where it lands, but in a straightforward way, if the assumptions are too high, then the forecasts will be too high.
What are the biggest risks that could cause the Liberal government's fiscal projections to miss their targets?
There's a number of fiscal risks, and I think people are very cognizant of the trade situation, especially with the U.S. The ongoing conflict in the Middle East has implications for oil, for trade, for supply routes, for supply chains, and the global stock markets, I think, are an increasing source of risk. In that, people are very concerned that the valuations we're seeing right now may be overly inflated, and that could be painful to see it unwind.
If you take away Canada's connection to the U.S. market and basically you take away one of the biggest reasons that companies choose Canada in the first place, would you say that that's a big risk?
I think it's straightforward that Canada is got significant ties to the U.S., and what happens in the U.S. Has always had big implications for Canada.
Your office projects spending will be roughly $6 billion higher by 2030 than the government projects, correct?
I think that holds.
That means your office expects government spending to be higher than the government says it will?
I think our forecast saw a lot of revenue weakness, especially in personal income taxes. That's part of that.
Does that spending gap remain after accounting for the government's SUR initiative?
We've built in the SUR into that track, yes.
That's our time. We'll go to Ms. Martin, please. Welcome back.
Thank you, merci d'être venu. And
Thank you for joining us.
I'd like to explore a little bit about the economic and fiscal update of June 2026, specifically around the notion that net exports are projected to, in your words, be a persistent drag given the situation that we find ourselves in, particularly with the unjustified tariffs being levied against Canada and many other countries, of course, around the world. What if we were to see even a partial tariff rollback from the U.S. over the course of the coming quarter or two? And what would the impact of that be on our fiscal outlook?
It would definitely be positive. We haven't costed specific scenarios of specific tariff tracks. Our forecasts are based on essentially a status quo tariff environment, but that would definitely be positive and help in a number of direct and indirect ways.
Thank you. And what if we were to be able to diversify our trade and see our net exports rise as a result of trade agreements with countries other than the U.S., given the situation that we find ourselves in with our largest trading partner?
Trade diversification and greater trade with other countries would definitely be a positive.
So would you say then that focusing as a government on trying to reach an agreement with the U.S. to either partially or fully roll back these unjustified tariffs and focusing on trying to diversify our trade with other countries are two strong strategies for trying to boost GDP growth given what's within our control as a country?
I would agree with that.
Thank you. I'd like to ask a couple questions around population growth and demography. You have some estimates around growth stabilization over the medium term at a lower rate than has historically been the case for Canada. What do we know about the drivers of the demographic shift in the Canadian context?
So I think we've updated our demographic profile to be consistent with the recent changes of the government's policy stance in respect of immigration in particular. And so the profiles that you see have been updated to essentially align with that much lower growth scenario.
And what about within our country, those communities in which we're seeing greater than the average population growth? What do we know about those drivers of demography?
Yeah, sure. I would say that was not part of this study, the changes in demography inside Canada. So it would be outside the scope of this work.
So walk with me here. It's my understanding that in general, Canada has had a slower rate of population aging than many other comparator countries, in part because of our immigration policy, of which Canadians are, I think, rightly proud, but in part also because newcomer communities and Indigenous communities tend to have higher birth rates, and therefore our demographic shift has been slower than, for example, in many European countries or other comparator nations. Is that consistent with your understanding of what shapes the particularly Canadian story around population aging?
I'll ask Carolyn to take this.
Yeah, so I can give a little bit of background about how we do our demographic modeling. Essentially, what's part of our economic outlook there is a combination of our own modeling on the immigration flow in the short term, kind of converging to the medium growth scenario from StatScan. So the different dynamic happening in different parts of the country, that's part of our base estimate because that's something that's reflected in their own modeling.
Given that that's the case, then it would seem that investing as a government in growing capacity among young people, investing in newcomers and making sure that they can achieve their economic potential, and investing in Indigenous communities so that Indigenous youth can achieve their potential would be good ways to mitigate the demographic shift that we're seeing in all advanced economies. Would you agree with that? Great, thank you very much. I think that's my time, Chair.
With 1 second to spare. Ms. Ryan and team, thanks for being with us again. We certainly appreciate it. And of course, you are always welcome. We'll look forward to seeing you back for another meeting, probably in early July when I call unexpected meetings. Anyways, have a wonderful summer. Colleagues, we're going to suspend quickly, but just hang on 2 seconds because I need to discuss a couple things offline. We are back in session. Thank you, everyone, for your patience. Welcome back, Mr. Cloutier. We're going to hear from the opening statements from Mr. Cloutier and then Ms. Lerme. Colleagues, because we have someone online, if you're putting out a question, please make sure you advise who you're directing it to. We've got 15 minutes, so we'll hear the two opening statements, and then our other witness, when we find him, we will hear from that person after we vote. So, Mr. Cloutier, the floor is yours for 5 minutes, please. Welcome back. Thank you for changing your schedule for us. Go ahead, sir.
Merci, Monsieur le Président, et merci.
Thank you, Mr. Chair, members of the committee. Thank you for having us here today and for giving us the opportunity to contribute to your study on the Buy Canadian policy. My name is Danielle Cloutier, and I am the Quebec Director of Unifor. Unifor is the largest private sector union in Canada. We represent 320,000 members, including 55,000 in Quebec, across virtually every sector of the economy. I'll get straight to the point. The trade war launched by the United States reminds us of a harsh truth. Our economy has become too dependent on a single partner, and our industrial capacity has eroded. The good news is that Canadians have realized this. They want us to buy what we make. By launching its Buy Canadian policy last December, the government showed it was listening. That's a good start, but we need to think bigger and further ahead. Let me tell you about a case that sums up the whole issue, the Paccard plant in St. Thérèse. It's the last truck assembly plant in Canada, the very last one. Peterbilt and Kenworth trucks have been built there for decades. In January 2024, they were producing 92 trucks a day. Today, they produce 25. We've endured several waves of layoffs since last spring. Nearly 800 jobs have been lost. Hundreds of families affected in just over a year. Why? Because Mr. Trump imposed a 25% tariff on trucks, and part of production was moved south of the border. These tariffs are unjustifiable and must be removed. The company is trying to reinvent itself. It is turning to the Canadian market and to electric trucks. These are commendable efforts, but let's be clear, without an order book, these investments won't bring our members back to work. And that is where the government has direct leverage at every level, federal, provincial, and municipal. Our public fleets, our crown corporations, and our police forces still too often purchase trucks manufactured elsewhere. When we have the country's last remaining truck factory and we allow public money to be spent elsewhere, something is seriously wrong. That is why our demands are concrete. I present them to you in order of importance. First, and this is essential, we must retroactively apply Buy Canadian requirements to strategic contracts for the country's rebuilding and to high-value contracts worth over $1 billion that have not yet been awarded. I am thinking in particular of Via Rail's $3 billion contract for new rail cars and locomotives. $3 billion in public funds. This is exactly the kind of leverage that can build a supply chain, support thousands of jobs, and anchor expertise here. We cannot afford to let this slip away. Second, U.S. suppliers must be excluded from preferential treatment in your next reciprocal procurement policy, and this applies regardless of their status as free trade partners. Reciprocity works both ways. Buy American rules shut the door on our companies. Meanwhile, our public procurement remains wide open to theirs. That imbalance must be corrected. Third, all powers available to the government must be considered to discourage offshoring. A legal opinion we commissioned is clear. The Extraterritorial Measures Act already exists. It can be invoked quickly, without new legislation, to sanction companies that comply with the United States unfair trade decrees. It can be expanded. Penalties can be increased. It is even possible to ban the re-importation into Canada of goods that were once produced here but are now being brought in from the United States. The Paccard case shows that this is not theoretical. A final word on the instinct to choose the lowest bidder. The principle makes sense, especially when public finances are tight, but the lowest price on the invoice isn't the true cost to society. When our industrial footprint erodes, our tax base shrinks along with it. Jobs, tax revenue, and communities disappear. We therefore need a more flexible approach, an approach that incorporates other criteria: local content, industrial footprint, our capacity for domestic manufacturing are examples. Buying Canadian isn't an expense, it's an investment in our own resilience. Our members aren't asking for charity, they're asking for a chance to build here what we buy here. Thank you, and I'm available to answer your questions.
We'll now go to Ms. Lermy, please, for 5 minutes.
Bonjour. Monsieur le Président, Mesdames et Messieurs les membres du
Mr.
comité.
Chair, members of the committee, thank you for having me today. I'm Charlotte Laramée, CEO of Alu Québec, the aluminum industry cluster. We often hear about aluminum producers. I'm going to talk about the rest of the value chain, including SMEs, about the processing companies and equipment manufacturers that make up our ecosystem, both in Quebec and elsewhere in Canada. In Quebec alone, this includes more than 1,700 SMEs, processing companies, and about 50 equipment manufacturers that contribute to the competitiveness of the entire manufacturing sector. So our companies are limited to local markets because of the price of aluminum. That's why a Buy Canadian policy is very well received, but the devil is in the details, and we need to look at the needs on the ground to deploy it well. There are 3 major elements to keep in mind. The first is understanding the reality of SMEs. The second is changing the way we approach calls for tenders and structure contracts. And the third is understanding the Canadian aluminum value chain. The first reality is that for SMEs to truly benefit from a local procurement policy, it must be scaled to their needs. Our SMEs tell us that the thresholds for Buy Canadian remain too high. Things need to be scaled to them. And contracts are often for renovation, which are often smaller in scope, and they wouldn't activate Buy Canadian. So what we recommend is to not have to avoid focusing solely on showcase projects and instead support initiatives on a scale that will truly enable SMEs to secure them. And we recommend breaking projects down into smaller projects so that smaller companies can secure them. And then when SMEs are qualified under the HS code catalog, we could ensure that regardless of the contract size, it could be prioritized for these opportunities. The second point is about the reality concerns how we draft our requests for proposals and contracts. First, there is the choice of material. Even today, some requests for proposals directly steer the choice toward a specific material. In some cases, aluminum doesn't even get a chance to demonstrate its suitability. We're not asking that aluminum be used everywhere. We're asking that the right material be used in the right place, that entrepreneurs can demonstrate their case. And then, public contracts still place too much emphasis on the lowest bidder. They should look at the total cost of ownership. Aluminum is sometimes more expensive to purchase, but it resists corrosion, it requires little maintenance, and it offers a long service life and retains significant value when recycled at the end of its life. So it's worth considering. If we want Buy Canadian to deliver the best results for taxpayers, we need to focus more on the total cost of ownership. Last point here is risk sharing. When a contract is signed and when it is deployed and the time of that deployment, a lot of time can go by. With the tariff war and the situation in the Middle East, there's an impact on the price of the raw material. For aluminum, it has risen by 15 to 20%. A contract that was profitable a few months ago might no longer be so today. There might be a deficit. Our recommendation is to have indexation clauses which allow the contract to adjust in line with the changes in the cost of raw materials. Now, if we look at the way we structure our supply chain for aluminum in Canada, the value chain is neither Canadian or American. It is North American. There are things we cannot do in Canada. We can't do plates and sheets, for example. A policy like Buy Canadian needs to protect our knowledge, what we can do, and let us bring in what we cannot do. We need to be vigilant about the partners we choose, however. Some are on a level playing field, like Europe and the United States, but there are other partners that are non-market economies that subsidize their economy, that have an influence on our market, especially since the U.S. has closed their borders and they're weakening our value chain. I'm thinking of China, Turkey, and Taiwan. And this impacts Canadian extruders. We have a structured supply chain that's being weakened, and our local companies and economies are being weakened. For SMEs, a policy like Buy Canadian is more than just a measure. It is a guiding star that will enable them to steer their strategic choices and ensure the sustainability of their sales. But with a policy like Buy Canadian, we need to have the conditions that will allow our SMEs to benefit. I'll conclude with one final observation. Buy Canadian is an excellent initiative. It is ambitious and addresses an urgent situation. So it would be only natural that it won't be perfect from the start. We would ask you to collaborate with industry so that it can remain flexible and evolve. I'll conclude by saying our SMEs are not asking to be saved. Our aluminum SMEs are not asking to be saved. We want opportunities, predictability, and to be able to have a free trade market where we work with partners. And I'd like to really thank you. We don't want to lose a strategic value chain, aluminum, that serves industries like defense, aerospace, the north, and construction. The question is simple. When we talk about Buy Canadian, are we talking only about buying local, or do we want to ensure the sustainability of a key industry for the coming years? Thank you.
We will suspend till we're done our vote. Mr. Marcel, welcome. We'll open with you for 5 minutes, please, and then we'll start
Thank you very
around
much,
questioning.
Mr. Chair, Monsieur le Président, Mesdames et Messieurs les membres du
Mr.
comité.
Chair, members of the committees, I am pleased to be here today to contribute to your work on Buy Canada Canadian policies and on the role that public procurement can play in supporting our economy, create jobs, and build long-term industrial resilience in the manufacturing sector. Canada is at a pivotal moment. Across the country, and for several years now, governments have been investing heavily in infrastructure and public transportation systems. The question is whether we will use these investments strategically as a lever to strengthen our industrial sovereignty, rebuild our supply chains, and create lasting economic value for Canadians. As a global leader in rail mobility, with experience delivering tramway, commuter rail, metro, and high-speed train projects all over the world, we believe that the answer is yes.
Rail company with manufacturing facilities in Canada. We employ over 5,000 Canadians, including 1,000 engineers, and operate major facilities in Saint-Bruno-de-Montarville, La Pocatière, Thunder Bay, Kingston, and Brampton. Moreover, Saint-Bruno is home to Alstom America's headquarters, overseeing activities from Canada to Chile. The Caisse de dépôt de placement du Québec is our largest shareholder worldwide. This leadership presence reflects Canada's importance within our global organization and demonstrates that Canada is not simply a market for Alstom, it is home. Our trains are designed, engineered, manufactured, tested, commissioned, operated, and maintained here in Canada by Canadian workers. Every day, Alstom employees deliver transportation solutions that connects people to jobs, students to schools, businesses to customer, and communities to opportunity. We are proud to support major transit and rail systems in cities including Toronto, Montreal, Ottawa, Waterloo, Vancouver, Edmonton, and soon Quebec City. Millions of Canadians rely on these systems every day. Beyond our own workforce, we support a broad Canadian supplier network of over 900 companies, small, medium, and large, representing hundreds of additional jobs and millions of dollars in GDP contribution. We have seen what is possible when governments establish clear local content requirements. In last January, we announced a 2.3 billion Canadian dollar contract with the Toronto Transit Commission to deliver a new fleet of 420 subway cars before options. Thanks to the leadership of all three levels of government, this new subway train project includes a minimum of 55% Canadian content and will generate up to 945 direct, high-paying jobs in Canada, as well as support 1,700 indirect jobs, providing a strong, concrete return on investment for taxpayers. This is a clear example of what a Buy Canada policy can achieve. Partout dans le monde, les pays utilisent de plus en plus les...
Around the world, countries are increasingly using public procurement as a tool of industrial policy. The Buy America Act has enabled the United States to attract investment, build new production and innovation capacity, to grow its manufacturing sector, and to create skilled jobs. The U.S. government has provided certainty that public investments will generate domestic economic benefits, and manufacturers have responded in order to maintain access to the U.S. public markets. Historically, Canada, as a small open economy, has relied on open markets to create wealth. That was true until our partners stopped offering the level of reciprocity we expected. In the face of supply chain erosion and the decline of our manufacturing sector, primarily to the benefit of the United States, a strong and clear Buy Canadian policy can help reverse the trend. We recognize that increasing Canadian content will not happen overnight. Rebuilding supply chains will require time and investment. But it all begins with a choice: to invest in ourselves, to select our products, to prioritize our expertise. At Alstom, we believe public procurement remains one of the most powerful tools governments have to support this growth. and we are ready to answer that call with the support of our customers, our suppliers, our union partners, and our employees. Thank you.
Thank you. We'll start with Mrs. Block for 5 minutes, please.
Thank you very much, Chair, and thank you to our witnesses for joining us. I would like to start with my questions to Mr. Marcel with Alstom. In a June 8th press release, you announced that Alstom received a renewed funding agreement from Export Development Canada in order to enable your company to expand low-carbon rail in markets around the world. Is this correct?
It's correct.
Okay. Can you tell us which countries that would involve?
So Alstom is working in more than 60 countries all around the world. You know that the mandate of Export Development Canada is to support customer worldwide of Alstom, so we can have access to those markets and develop some of those products. Those markets are very, very different. It could go from Eastern Europe to Latin America, for instance, and all depend on the projects and of the moment. The agreement with EDC offer to Alstom their full suite of financial product that we can offer to our client moving forward. And that's our intention, to use it to develop different project. Could be high speed, for instance, could be commuter rail, whatever, all around the world. What is specific with this agreement, it's highly interesting, is that we are both committed to continue to grow our local supply chain and to scale up some of our local companies to also be able to support Alstom on different markets and not just on the Canadian market moving forward. And that's something very, very important, because, you know, like what we experienced over the last few years, we saw the rail industry supply chain move south of the border, right? Because United States has a very strict regime of Buy America, and Canada was not asking a lot in terms of economic impact in Canada. So the natural decision for an industrial player is to establish a plant in United States to deliver on the United States market and to export to Canada. With Export Canada, we will try to reverse this tendency, this trend, and starting to scale up our local supply chain here in Canada to support Alstom on different markets.
Thank you very much for that. Will you submit a table to this committee outlining which countries EDC Canada is giving you funding to build in, as well as the dollar amount from EDC?
You mean if I can provide the committee with the different agreement that we've had? It's probably
just a list of the countries and the dollar amount. I certainly understand commercially sensitive information.
That's exactly.
I just want a list of the countries. And
yeah, I will come back to the committee with the proper information related to this. Thank you.
Okay, thank you. As the government looks to procure projects with Canadian content, how much of a project cost is spent complying with emissions regulations here in Canada? Let's say, for example, procurement of metro trains.
Not sure I understand the full scope of your question. So you're talking specifically about the cost of the project in Canada, or when you say emission, you're talking about
the environmental emissions regulations here in Canada. Is there a cost for a company like yours to demonstrate or to comply with the emissions regulations here in Canada?
There's not really, not a real impact, I would say. Minimal, really minimal.
Okay.
Right, and that's we are in the rail manufacturing sector, and we're producing rail systems that we do not produce diesel locals. So it's all green system, green propulsed systems, and electric systems. So it's not very difficult for us to demonstrate the impact.
Okay, so beyond steel and aluminum, what other components does your company use in building trains?
Trains nowadays are a very complex product, right? Back in the days, we were saying that it was a steel can on on rails. Now it's almost computers on rails, and but the manufacturing, the car body, it's still a lot of components. So from Canada, yes, we have primary parts like aluminum and steel. That's one thing. But when we look at the different components, you can think about the roofs, the car body, radio, isolation. There's all sorts harnesses. So there are all sorts of components that can come from Canada. It depends on the projects. There's sometimes very specific elements that are requested by our customers, and it's possible that we're not able to procure those elements in Canada. That's very true.
Okay, last question.
You've got 1 minute and seconds.
Okay, last question for me will be, do you pay the cost of the carbon tax on the materials like steel and aluminum that you're using, or steel? And is that, how significant is that cost?
I can't tell. You know, I need to look specifically about who's paying the carbon tax on these components. Is it the producer or it's us as the buyer? I need to check and I'll come back to you.
Thank you.
Ms. Martin, please, for 6 minutes.
Merci, Monsieur le Président.
Thank you, Mr. Chair. Thank you to all of the witnesses. Thank you for your enthusiasm, the enthusiasm shared among the three of you. It warms my heart to see the enthusiasm from the three witnesses from different backgrounds for this Buy Canadian policy from the government. I'll begin with Mr. Marcel.
Rosedale, which is in the heart of downtown Toronto, and line 2 of the TTC runs right through the heart of my riding. So it's exciting for me and for my constituents to contemplate the notion that our new subway cars will have been built here in Canada and in Ontario. From your perspective, what does it mean for the people of my community, and how can we work together with you to tell the story of what Buy Canadian means for those riders who are getting on to a Canadian-built subway car on our Line 2 subway?
For Torontonians and transit users of the subway cars, it will be they will have access to brand new last generation subway cars with all the latest amenities that's going to be in there. It's important for Toronto. I think that we all know that the growth of the city is exponential. And we're seeing right now with the FIFA, the World Cup, the number of people who are using transit in Toronto. It's a challenge. You know, we're operating and maintaining also the GO Transit network, and so we've been asked, obviously, to step up to make sure that we will offer a flawless service to the population. So that's really important. And Line 2 is one of the most busiest line in currently of metro cars using in the world. So that's really important. We have also, I must say on top of that our supply chain is very diverse. It's go across Canada. Obviously, we have some company from Toronto, but we have also companies from BC, from Alberta, from Quebec, from all around Canada that are working with us. And some of those suppliers will benefit from the new subway train project, that's for sure.
Well, this links to my next question, actually, which is about the supply chain. Can you describe briefly for us how that Buy Canadian policy works its way down the supply chain? And I'm curious also from the perspective of Madame Laramé, you know, we all, of course, want to see small and medium enterprises supported in Canada. And also, this government is investing, understandably, in big, important nation-building infrastructure projects that require a volume of supplies that can make that tricky and difficult. So I'm interested to understand how Buy Canadian works its way through the supply chain, whether it's for Line 2 or anything else, and how can we be inclusive of small and medium enterprises in these big nation-building projects?
Yeah, maybe I can go quickly and Charlotte can complete. So when we think about Canadian content, there's two main elements that we must think into consideration is where we are producing those goods And for Alstom, for instance, we are the only rolling stock manufacturer, passenger rail rolling stock manufacturer that has a footprint in Canada. So for us, we have the facilities, we have the employee, we have the expertise. So I wouldn't say it's easy, but we have this opportunity to use our footprint to respond to local content requirement. But that's not the old solution. We can do this and not reaching a 50% plus Canadian content, right? The second part of the equation is the supply chain. And this is where probably most of the work in the rail sector will come from. A lot of our supply chain need to be reshored in Canada. It moves south of the border for a lot of those. I'll give you the best example, stainless steel. We used to produce stainless steel in Canada. We do not do anymore, right? It moves south of the border. So to bring that back, we need volumes, we need predictability, we need stability. And this will come with large contract that will be steady, offered with a Buy Canada requirement that it's strong and clear and predictable. So companies will think about making new investment in Canada, rebuild their capability in Canada to have access to those contracts. We cannot move forward with those, there's a contract with local content requirement, there's another one without one, and we do yo-yo like that. It needs to be consistent. This comes from the governments.
And I do want to come back to Madame Laramé, but before we run out of time for Monsieur Cloutier, just on this question of the lowest bidder, can you say a little bit about what it means for good union jobs in Canada? To have some flexibility around the kind of lowest bid approach when we think about a Buy Canadian strategy that is also about uplifting Canadian workers.
In about 25 seconds, please. And you're muted, Mr. Cloutier.
Un exemple frappant.
A striking example, PACCAR is trying to obtain a contract with the City of Laval for trucks. And what we've understood is that they won't get the contract because of 1% of the value of the contract. Clearly, the impact on manufacturing in Canada is not taken into account when choices like that are made on 1%.
That's our time, but a great example in the time allowed, Mr. Cloutier. Thank you. Madame Gaudreau, please, for 6 minutes.
Je veux juste vérifier, est-ce que vous avez été, Madame?
I just want to check, Madame Laramé, were you consulted? Since December, have you been consulted? We have been consulted. We worked with the PSPC team on the approach for aluminum. Did they say they would continue consulting you? Well, we've been in touch with them on certain products, but it's about seeing what's done and what's not done in Canada on what we work on. But on the Buy Canadian policy, we haven't discussed that. Okay. So it's necessary. That's what I hear from you. Okay. Mr. Cloutier, in your opening remarks, you say that the Buy Canadian policy is a good start, but concretely, what does it mean? Well, in the examples we've provided, like Via Rail, $3 billion, that type of contract ensures a supply chain and quality jobs for years to come, because then there's the maintenance of those cars. And then with the PACCAR example, in a number of cases, what we understand and what we're told sometimes is that there's some flexibility that can be tolerated, but there's so much pressure for the lowest bidder. Fears are so high that there would be lawsuits or that they would be judged to be poor managers. So that flexibility isn't applied. And we think it has to come from Treasury Board, a clear message at the federal government and the provinces to say, no, here's what we want. So this industrial strategy for Canada, what would be the elements? Because we need to improve it to have a real industrial strategy for Canada. Well, we need to try as much as possible to get out of commodity markets, to produce value-added products that will serve our own needs and that sometimes could be exported. And in many cases, we're limited, like softwood. That's one example. We produce a great deal of softwood, but it's a commodity market still. And so Should we do more biofuels? Maybe that would compensate what we're not doing in softwood, but it's still a commodity. And so the idea is to transform our materials here at home to serve ourselves and also to develop wealth. We're talking a lot about policy and procurement. Do we have an industrial policy at the national level in Canada? Well, to our knowledge, no. We're advocating for one, to have one for aerospace, for forestry, for a number of other sectors. But for aerospace, there's another good example. Last year, or about a couple of years ago, we needed surveillance planes, and without a call for tender, but there are Canadian companies like Bombardier that wanted to at least present an offer, but no, there was no call for tender, and it went straight to Boeing in the United States with a model that was outdated. So they didn't think about whether it was the model we wanted for the future, and our own suppliers weren't able to participate. So is there a policy? We have our doubts. And that's what I bring up again and again. That situation with Boeing was unacceptable. I have a little time left. Excuse me, I apologize for touching the microphone. So the European model, when we look at countries like Germany and France, South Korea, we see that the state plays an active role in developing industrial subsidiaries. Should we take inspiration from that? We think so. We think the state can be like an orchestra conductor to orchestrate that industrial policy. We're not asking the state to be the investor, to nationalize. We're comfortable with the private company taking care of that. But we need to develop that vision. And the vision, for it to exist, it needs to be centralized somewhere, and that's the government's role. Could you provide the elements of those models that are the most relevant for Canada? Because we're running out of time. I'd like to ask questions to Mr. Marcel. Buy Canadian or build Canadian? Since the beginning of the study, we've talked about procurement, public procurement, and Canadian content. I'd like to draw a distinction. Is the Buy Canadian policy a buying policy, or should it be for industrial development? It can be both. It can be both. If you buy Canadian, it implies that someone in Canada built something, but it's especially a policy that can leverage our manufacturing sector, which is honestly not doing very well in Canada compared to what's happening in the United States. So it becomes an industrialization or a re-industrialization policy. I would go so far as to say that. It could be extremely helpful because the state has the means. We're talking about huge contracts in our area and other areas like defense. So we can't let it slip by. It's a leveraging effect. There are limits as well. There are obstacles that mean that Canadian content can't be used more in big rail projects. No? Well, there are some, but that's because there was a period, a time. I'll talk about the metro in Montreal with Azure. It was built with 90% local content.
Tellement agréable en français, Monsieur le
It's so great to speak in French with the witnesses.
And I understand we might have bells again soon. We'll be able to get through it, 30-minute bells, if we can just agree that we'll power through when the light starts. Wonderful, thank you. Mrs. Johnson for 5.
Okay, Mr. Marcel, the government says that Canada should be our own best customer with this Buy Canada project. And at the same time, EDC, or Export Development Canada, is helping finance infrastructure projects outside of Canada. So I'm trying to understand, how do Canadians measure the return that they're getting from these foreign investments, and how to track Buy Canada data at Alstom? So the original EDC Alstom agreement provided for up to $3.5 billion in financing support to pursue and deliver rail and transit projects outside of Canada. Can you tell us how much of that financing's already been used to date?
Yeah, I don't have the data. We can probably provide within the limit of commercial confidentiality, as you can imagine.
Thank you. Can you identify the major projects that have benefited from this taxpayer support partnership?
The projects that are used are the very same kind of project that EDC are using for different kind of sector around the world. That's their.
No specific identity of a project, a major project
But
somewhere.
in the case of Alstom, we're talking about rail project. That's what we're talking about.
Okay. So how many Canadian jobs have been created or maintained through those projects?
So Alstom is on a growth path in Canada, right? We have created over 1,000 jobs in Canada over the last 5 years. So since this first agreement with the EDC is in place, we continue to grow and make tremendous investment in our facilities in Canada and developing our supply chain.
So, thank you. So I understand 1,000. So how much Canadian content was supplied in those projects that we're not sure where they are?
These projects do not have any requirement related to Canadian content. It's projects that are built in other countries. And Alstom has a strategy of being multi-local. It means that we build in Canada for Canada and we build in other countries for other countries.
Okay, so the financing that you receive from EDC therefore requires no reporting in regards to Buy Canada content?
There's reporting.
On
We report
Buy-
to EDC. Yeah.
On Buy Canada, EDC is asking you to report on their
course,
Buy Canada
of
content.
course.
Okay. Does EDC publicly report those figures, or do you?
It's EDC. You need to ask this question to EDC.
So they have reports. They have public reports of your
To
Canada
my knowledge,
content.
they have reports on every investment that they are making for every client that they have in Canada.
On Canadian content issues.
On Canadian content and any kind of other metrics that they are tracking part of their investment.
And what percentage of the supported work occurred in Canada?
Could you repeat the question?
What percentage of the work that was supported by EDC occurred in Canada?
I don't have the answer on that specifically.
How about what percentage occurred outside of Canada?
I don't have the answer on that as well. You're very specific in your question. I'm happy to come back to the committee with the question, with
because
the
it's a Buy
responses.
Canada study. Yeah, please do. Thank you.
Right.
If a project receives EDC support, is there a minimum Canadian contact requirement?
There's metric that Alstom need to track and report to EDC that could be of all sorts, and that include growth. Growth and jobs created in Canada.
Right, but is it Canadian content requirement? Because this is a Buy Canada study.
Yeah, but I just want to say that the EDC agreement is not directly related to the Buy Canada Act. It's not related. EDC is for export and market. Buy Canada is building in Canada. Those two different things.
Yes, no, I understand that. But you're using Canadian money, and we're asking right here at a Buy Canada study, what kind of Canadian content are we, like how do Canadians track what they get out of Buy Canadian content? So should Parliament be able to measure the Canadian economic return generated by this partnership?
I think you do. I think you do through, I don't know if it's through this committee, but other committee when EDC comes and report on their activities.
Okay, so what due diligence does Alstom conduct to ensure that workers in its global supply chain are not being exploited or working illegally? I understand you're very heavily in China. I think you have 11 projects there.
We're in 60 countries all around the world. We have strong ethics and compliance.
Specifically asking, what are your due diligence requirements?
We do. We have due diligence. They are public, by the way.
But what are they? Like, where do you report?
We have policy. We have ethics and compliance policy, and we have supplier behavioral policies that we apply strictly throughout our supply chain.
Quick change, is the funding you receive from EDC subject to the Buy Canadian rules? Just straight up, yes or no?
No, absolutely no.
Okay.
It's not the same. It's not the tool for Buy Canada. It's a tool for exporting. That's different.
Thank you very much. Ms. Rochefort.
Monsieur le Président, Madame Laramé.
Thank you, Mr. Chair. Ms. Laramé, quickly, you said that the $5 million threshold is too high to attract enough interest from SMEs in the Buy Canadian policy. Did you say that? Or do you have a number in mind or a recommendation to make regarding what the right threshold would be? When PSPC presented Buy Canadian to us, the committee we were working with, $25 million was the first threshold to activate Buy Canadian, and then $250,000 for materials. $25 million seems to be too much. SMEs were saying $5 million seems more realistic. And they told us that often these were contracts that would be for renovation. There are few new contracts. It's more about renovation. And then the threshold is lower. And then they don't activate the $25 million for Buy Canadian. It's just to ensure that calls for tender are smaller and that Buy Canadian can be activated more often than in those big showcase projects. That's our concern for SMEs. Did you submit those points in writing? No? It's an informal exchange with PSPC. It wasn't done formally. Yes. Mr. Cloutier, quickly, I appreciated your comments. It's sad the example with Laval, it affects all of us because it's a challenge with municipalities, with the rules when it comes to international trade. I just want to refer to something, and I'd like your opinion of the three witnesses if we have enough time. It said,
Public procurement, other countries may do the same to Canadian businesses. Still, others argue that Canada is clinging to the fiction that free markets still exist, while competitors build protected ecosystems and needs to adapt to the new realities. This requires a complete retooling of the system in order to serve economic sovereignty and national security. Alors, je sais que vous avez fait certains commentaires, M. Cloutier, mais
I
pour
know
les...
you've made some comments, Mr. Cloutier, but could you tell us more about a recommendation on this?
Je voudrais que
I'd say I tend to agree with what you just read. We often have the impression that we see other countries, we refer to Europe, we refer to the United States, that have much more aggressive policies for buying local. And we're constantly told, given international agreements, it's not possible. But why is it possible elsewhere and not here? And so I think we need to take action and organize to compete on equal footing.
Cloutier.
Thank you, Mr. Cloutier. Mr. Marcel. I would agree with the proposal, and it echoes what I said in my remarks. These are really tools that will allow us to have industrial sovereignty that we've lost over time. Do you have specific recommendations regarding how Canada should approach that challenge? Well, I think the Buy Canadian policy, in the way it's currently designed, is a very good first step. A very, very good first step. Maybe it could be more specific in the targets sought for content, so it could be clearer for now. It's about discounts that could be provided or valuing Canadian content within the policy. That's a first element. A second element would be we need to ensure that all levels of government have a similar approach regarding this matter. So there's procurement that's under the direct authority of the federal government, others the provinces and territories, and others cities. But in our area, it's not rare to see transit being funded by the three levels of government. So there needs to be some consensus policy that's aligned on building local. Excellent comment. Thank you very much. And Ms. Laramé, what would your comment be on this? Listen, I made the point of the value chain that's North American. I think we need to be vigilant. Buy local policies are good, and they need to align at the three levels of government. That's essential. But there's also the concept of reciprocity. You have to choose the partners you want to work with. For some topics, we work with the federal government. We have discussions to say, let's protect local companies from non-market economies like China, Turkey, and Taiwan. But then we're told, yes, but if we have quotas or tariffs, we'll lose access to our international partners. But which partners do we want to deal with? The devil is in the details once again. We need to choose the players where there's a real reciprocity, and in terms of volume, we need to be aligned. If we say we'll work with Europe for aluminum processors, it's not realistic. Aluminum is more expensive in North America. We won't be able to sell processed goods in Europe. That's not the case for processing. So we need to look at reciprocity and see what we're talking about. What are the volumes? It needs to be a win-win. But there are countries that weaken our local supply chain. Aluminum is in a perfect storm now. We're losing market share with the United States. We have non-market economies coming to eat our lunch here because of the lowest bidder policy, so we can't compete with things that are 30 to 40% less expensive than what we can build here. So we have to take the price into account with a local purchasing policy. We need to look at what we're able to value to protect our industry. There was a question about whether it needs to be an industrial policy. I would say yes, it's buying local.
Perhaps can we take it up with Madame Gaudreau? Thank you.
Comme j'ai 2 minutes 30 puis que ça va vite, c'est pas parce qu'on n'a pas
I have 2.5 minutes, but you can always provide all of the details and information, what's come up today, because that's what the committee is for. If we hadn't consulted you, well, it wouldn't be a dialogue. We want your input. And so I would say that to Mr. Cloutier as well. And in your recommendations, if I ask you a question spontaneously, Mr. Cloutier, what absolutely needs to be in this Buy Canadian policy to obtain a good result?
You're on mute again, Mr. Cloutier.
On recommence.
OK. Excusez.
We'll start. Earlier, I provided 3 concrete possibilities. I would say we need to look at how contracts are attributed regarding the lowest bidder. That would be pretty urgent. Ms. Laramé. Predictability, so our companies are able to invest and know where to direct themselves. In defense, it's hard to have predictability. So we need to know where the opportunities will be, where the government will be investing. That would be essential for us to structure our supply chains accordingly. That would be good. Mr. Marcel, I agree with my colleagues. Perhaps also we could look at what is defined as Canadian and what is not. And so we need to avoid having people just open up a P.O. box in Canada to say that they're in Canada and they qualify according to the Buy Canadian policy. We need to look at the amount of investment, the real economic impact, employees, where the product is really prepared. So there's work to be done there. And then look at Ontario. Ontario has started reflecting on that element in terms of the definition of what is a Canadian product and what is not. Excellent. Thank you. Thank you very much, Mr. Chair. We look forward to your briefs.
Go to Mrs. Block, please.
Thank you very much, Chair. And I'm going to ask questions of Ms. Laramé. During this round, would it be fair to say that the effects of the punitive tariffs from the U.S. have been devastating to your industry? Thank you. So absent of measures in Buy Canada, is a trade deal still needed for your industry to restore long-term stability?
C'est essentiel. Les négociations du CUSMA
It's essential. CUSMA negotiations are essential.
Yeah. Sure.
Can you answer that again, please?
Yeah, it's very important to have good negotiation in the CUSMA.
Thank you. Do you, and I'll ask similar questions to those that I asked of Mr. Marcel, do you pay the industrial carbon tax on the aluminum you produce?
I don't know, I'm not a producer of aluminum, I'm representing the SMEs processing the aluminum.
Okay. Do you know, do those who are producing the aluminum pay the industrial carbon tax?
I don't know.
You don't know if they do. Okay. So then you would not know what the costs of emissions regulations are on the aluminum industry?
No.
Okay. Do you know how much of the business done by the aluminum industry is done with the automotive industry?
A lot. It's in Ontario mainly, but we know that there is some rolling mill. There is a rolling mill, in the U.S. So the aluminum produced in Canada is going to the U.S., coming back in Ontario, and going back in the U.S. So that's why it's very integrated value chain.
Right. So we have the punitive tariffs from the United States. We have the industrial carbon tax, which I'm going to assume our aluminum producers are paying. What is the effect of this with the allowance of Chinese-made EVs into the market?
I don't have the answer to that question. I don't know.
So maybe I'll ask you to speculate. Is it fair for your industry to have to compete with aluminum produced with forced labor?
No, it's not, and it's a big problem, and that's why we're asking the government, the federal government, to act for that and to protect our industry, local industry, from non-market economies. It's really making die our industry, our local industry, mainly for the extrusions.
Okay, so it undercuts the industry. The market shrinks as a result of these decisions for the aluminum industry. Is that correct?
Yeah, there is, like, it's a perfect storm from the market that we have lost from the US, and then the incomes coming from non-market economies, literally taking all the opportunities in Canada from our local industry.
Okay, thank you. I'm done, Mr. Chair.
Yeah. Mr. Gasparo, please.
Thank you, Chair. Thank you for being here. Mr. Marcel, the Government of Canada is spending a significant amount of capital on infrastructure and housing. The Buy Canada policy is one pillar of what we are doing in terms of trying to drive investment into our domestic economy. Alstom is a critical partner in delivering this investment while keeping economic benefits in the country. In January 2026, as we previously discussed, the federal government announced its first award under the new Buy Canadian policy, and I'm specifically referring to the 55 new subway trains for Toronto's Line 2, which will be manufactured in Thunder Bay. Maybe you can talk a little bit about what are some of the economic benefits that remained in Canada and that weren't really captured in the contract itself because of the Buy Canadian policy.
Thank you for your question. So I'll start with the workers. We're gonna design, prototype, engineer this train, this new subway train in Montreal. We will do all the subcomponent. The car body shell will be welded in La Pocatière, Quebec, shipped to Thunder Bay, doing all the final assembly in Thunder Bay. We're gonna test this train in Kingston, and finally they will be commissioned in Toronto. 85% of all the working hours, the people that will work on this train will be Canadian, 85%. So just in terms of working hours, it's a tremendous impact. We've talked about over 900 jobs, direct jobs that will be worked, that will work on the 600 will be at Alstom alone. So that's working hours. After that, it's the expertise of the supply chain. You know, the aluminum will come from Quebec. The carbon steel will come from Ontario. And there's different components that will come from all across Canada. All this in terms of value of the goods and product that will be in the train will reach 55% in Canada. Obviously, we would like to go higher than that. At some point, you know, there's just a limit of what the supply chain can deliver, and some components are not just in Canada for all sorts of reasons. You know, people are saying a lot, you know, sometimes we're paying our product a bit more because they are Canadian instead of building it from low-cost countries. That's true. That's true. We need investment in Canada to produce here. But the return on the investment for the taxpayer, it's different, right? It's not just about the cost of buying the product. It's what stays in the economy, it's circling back in the economy, what is back in taxes for Treasury as well. So all this needs to be counted when we're looking at a very large project like the NST project.
Well, so clearly you're a supporter of the Buy Canadian policy. And you talked about investment. And I'd like to just drill down a little bit on that, Mr. Marcel. Have you found that the Buy Canadian policy has given your company the confidence to invest and reinvest in Canadian facilities and workforce development more broadly?
It is giving this confidence to us. It is giving the confidence for the full industry, not just Alstom, the full industry, and even the competition. Like the competition, our competitors will be incentivized to localize in Canada following this, right? So that's exactly what we saw, for instance, in Australia, which has a strong buy local policy. Australia, same thing in United States, Israel, South Africa, even in Europe. There's some element of buy local within the European Union, and that has a strong industrial impact on the long run. But we need to have consistency and stability and predictability within the policies moving forward when all those large projects will come to the market. That's important for the full industry.
Well, you'll definitely get stability from our government. Thank you.
Thank you, everyone. Witnesses, thank you very much. Mr. Cliche, thank you for your joining us again after last week. Sorry, colleagues, just very quickly, Ms. Lerma, I just have one quick question. Has your industry asked for the government to launch anti-dumping investigation into some of the items that...
Not officially, but yeah, we are doing a lot of representation to say that we have to protect
Wonderful. Thank you very much. Yeah. Colleagues, if there's nothing else, we're adjourned. Whether the House is rising or not, depending on the rumors, we are still here Thursday for Canada Post. We are adjourned.